Ladies and gentlemen, good day and welcome to DCM Shriram Limited Q1 FY25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Siddharth Rangnekar from CDR India. Thank you, and over to you, sir.
Thank you, Vishal. Good afternoon and welcome to DCM Shriram Limited's Q1 FY25 earnings conference call. Today we have with us Mr. Ajay Shriram, Chairman and Senior Managing Director, Mr. Vikram Shriram, Vice Chairman and Managing Director, Mr. Ajit Shriram, Joint Managing Director, Mr. Aditya Shriram, Managing Director, Mr. Amit Agarwal, CFO, and Mr. Sanyog Jain, Deputy CFO of the company. We shall commence with remarks from Mr. Ajay Shriram and Mr. Vikram Shriram. Members of the audience will get an opportunity to post their queries to the management following these comments and during the interactive question and answer session. Before we please note that some of the statements made on this call could be forward-looking, and a note to that effect has been included in the conference call invitation that has been circulated earlier and is also available on the stock exchange website. I would now like to invite Mr. Ajay Shriram to give us a brief overview. Over to you, sir.
Thank you, Siddharth. Good afternoon, everyone. Thank you for taking our time and joining us today to discuss the company's performance based on our Q1 financial year 25 results. I'll commence with views on the industry dynamics and our strategic direction, following which Vikram will share the financial perspective. The global economy has become more resilient and is growing at 3.2% despite facing geopolitical conflicts, high interest rates, and climate challenges. There can be uncertainties arising in future as the economic and geopolitical events unfold. India continues to maintain economic momentum, and with policy continuity, the growth is set to further accelerate. The Union Budget has laid out the growth agenda with focus on agriculture, employment, research and development, and infrastructure, among other areas. We have aligned our strategy to focus on creating growth opportunities in businesses through capacity, capability, technology, new products, and value addition. In order to address economic uncertainties, we continue to work towards making our operations more cost-efficient. The initiatives that we have outlined are backed by a healthy balance sheet and are in line with our plans. Sustainability is a core element of our philosophy, which is well integrated into our operational and strategic pathways. Water and energy conservation are the core elements of our sustainability journey, along with social upliftment. I shall now move to the discussion on industry perspectives across our business lines. First is the chemicals business. Globally, the supply chain of caustic is balanced and the prices are stable, although on the lower side. There was an interim price uptick in the month of March 24, led by maintenance shutdowns in the US that are now back in operation. India witnessed capacities coming online this quarter of more than 1,200 tons per day, including ours, taking the industry capacity to more than 6 million metric tons per year. Indian industry continues to operate at a healthy rate of about 80%, excluding the recent capacity additions. This is resulting in an oversupply of caustic as well as chlorine in the market and therefore lower ECUs. India continued to be a net exporter of caustic this quarter as well. Our performance has been better both year on year and sequentially, mainly led by reduction in energy prices and higher volumes due to capacity addition. Prices have also been better during the quarter. We commissioned 850 tons per day capacity in May 2024. The capacity ramp up will be gradual given the oversupply in the domestic market. The 120 megawatt captive power plant also got commissioned in June and has started contributing towards better cost efficiencies. we are positive on the caustic and chlorine outlook over the medium term, given the steady growth in the consuming industry. Our hydrogen peroxide plant has started trial runs and is expected to be commissioned shortly. Epichlorohydrin plant will start trial runs in the second quarter of this year. As this round of capex is nearing completion, we are actively working on starting activities on chlorine and on epoxy and other downstream products, including chlorine downstream. Vinyl. Global demand for PVC in key economies is still sluggish. International PVC prices have firmed up mainly because of elevated sea freights due to the container shortages and the ongoing Red Sea issue. The domestic demand for PVC in India is robust and estimated to have grown by about 17% in this quarter in the wake of agriculture and construction activity. PVC imports in India account for about 68% of the demand and has grown by 21% in Q1 financial year 24. Pricing improvement has been further supported by softening trend of input costs, especially energy costs. The prices have reversed back gradually once the increase in ocean freight reverses. Sugar and ethanol. Global sugar demand and supply for sugar season 23-24 is expected to be balanced with a surplus of 1 million metric tons, similar to that of the last season. Indian sugar season 23-24 is expected to end with a stock of about 8 million metric tons as compared to about 5 million metric tons in the last season. The increase in the stock is mainly attributed to restriction on sugar exports and limitations on diversion for ethanol production. Diversion of sugar to ethanol in current season is 2.5 million metric tons versus about 4 million metric tons last year. Our cost of production has gone up due to increase in cane prices by UP government and adverse climatic conditions. While the price of sugar have increased, they are still not commensurate with the increase in the costs, leading to margin pressure. On the ethanol front, Government of India is committed to its 20% ethanol blending target by 2025. For ethanol supply year 23-24, there has been good progress in ethanol blending, with current blending rate at 12.7% despite restrictions on sugar-based ethanol. The grain-based ethanol has surpassed sugar-based ethanol, led by maize as the feedstock. There is a need to have more rational and consistent government policy for sugar as well as ethanol, which balances the feedstock, supports the farmer, the industry, as well as the consumer. Sugarcane crushing capacity expansion at Loni and the CBG plant at Ajwapur Sugar Unit are moving as per agreed timelines. Fenesta Building Systems. The broad performance in the business remains encouraging with strong aggression in order booking. The elections in the first quarter had an impact on the real estate activity in the country, which slowed the growth momentum in the business. We are expanding across geographies and SKUs. The business is investing in newer revenue platforms and capacity enhancement in order to deliver a healthy momentum on an expanded base. Now moving on to the agri businesses, which comprise of Shriram Farm Solutions, fertilizers, and the bioseed business. First, Shriram Farm Solutions. SFS has maintained its growth momentum and its top line has grown in double digits. This growth is driven by all the business verticals, namely seeds, crop protection, and specialty plant nutrients. During this quarter, we have launched 6 new products in crop protection and specialty plant nutrition verticals, out of which 2 are from our own R&D and are first-time launches in India. The growth focus of the business is led by our own R&D, collaborations, and exclusive arrangements to bring new-age products and global technology to the Indian farmers. Then fertilizers. The urea business environment continues to be stable. Our business performance has been lower because of maintenance shutdown taken in the current quarter. The gas prices are similar to the last year. We continuously focus on improving efficiencies, including energy consumption. Bioseed. India operations continue to expand with help of novel hybrids for key crops that we have introduced over the last few years. International operations have contributed well too. We have a robust pipeline of products, and with that, we are expecting to grow the business going forward. I will now request Vikram to take this forward by covering the financials. Vikram, over to you.
Thank you. Good afternoon, everyone. Our financial performance during Q1 financial year 25 was in line with our expectations. Chemicals and vinyl businesses saw improvement backed by supporting cost of environment. Sugar and ethanol businesses' margins were under pressure due to cost increases that were not commensurate with the increases in market prices. Shriram Farm Solutions and Fenesta Building Systems businesses continue to grow and deliver. The capex in chemicals business is nearing completion. The 850 TPD caustic capacity and 120 megawatt captive power plant have been commissioned during the quarter. We are confident of adding scale, newer product platforms, and bringing further improvements in our cost structures. I will now highlight the financial performance of Q1 FY25. The net revenues net of excise in this quarter were at rupees 2,876 crores as compared to 2,780 crores in the previous year. The increase in revenues is mainly driven by chlorovinyl segment, despite moderation in sugar business. Accordingly, PBDIT stood at rupees 274 crores, which is up by 49% year-on-year. Coming to chlorovinyl. The revenue in chlorovinyl segment increased by 15% and PBDIT was at rupees 177 crores as against 33 crores last year. The chloralkali business revenues were up 18% year-on-year and PBDIT was up at rupees 133 crores as compared to 36 crores last year due to higher volumes and significant savings in energy costs led by 44 megawatts renewable energy and lower coal costs. ECUs were slightly down by 2% year-on-year, however, were up by 8% quarter-on-quarter. Vinyl business revenues increased by 6% year-on-year and PBDIT was at 44 crores versus negative 3 crores last year. Volumes of both PVC and carbide increased. PVC prices were up by 4% year-on-year and carbide prices were down by 14% year-on-year. The input cost reduction during the quarter versus last year and sequentially, this has led to the better earnings. Further, there was a one-time positive impact of 16 crores each in chemical and vinyl businesses on account of reversal of electricity duty on auxiliary consumption of power in our power plants. Coming to sugar business. Sugar business revenues were in line with last year. Domestic volumes were also similar, while sugar exports were nil this year as against 2 lakh quintals last year. PBDIT has decreased by 57% year-on-year to rupees 38 crores on account of higher cost of production, mainly attributable to increase in SAP in the state of UP and adverse climatic conditions and lack of exports of sugar this year. Ethanol volumes have increased to 413 lakh liters, representing 15% increase year-on-year. The domestic sugar prices were at rupees 3,900 per quintal, an increase of 6% year-on-year. Fenesta Building Systems. Fenesta Building Systems have reported a growth of 7% year-on-year. PBDIT slightly moderated to 36 crores as compared to 40 crores in the last year on account of higher fixed costs incurred due to setting up of newer revenue platforms and enhancing capacities, and also due to higher sales promotion and business development expenses. Order book was up by 20% year-on-year. Shriram Farm Solutions revenues increased by 15% year-on-year, supported by both volumes and prices across the verticals. PBDIT for the quarter came in at 20 crores as against rupees 11 crores last year, despite higher marketing spends directed towards strengthening the Shriram brand and higher R&D expenditure. In the fertilizer business, the revenues declined by 13% year-on-year due to lower volumes owing to maintenance shutdown taken between quarter 4 24 and quarter 1 25. PBDIT was at 23 crores, similar to last year. There was a one-time net impact of 15 crores positive on account of reversals of provisions. Fixed expenses were higher as a result of maintenance shutdowns. Outstanding fertilizer subsidy this year was 133 crores as against 83 crores in this period last year. Bioseed revenue is stable. PBDIT has improved to rupees 29 crores from 23 crores last year, led by better product mix and prices. On our overall, our net debt as on 30th June 2024 is rupees 1,459 crores as against rupees 926 crores as on 30th June 23 and 1,434 crores as on 31st March 24. With a strong balance sheet and healthy cash flows, we continue to evaluate adjacencies in our core businesses to strengthen and enhance our portfolio and look for other opportunities for growth and cost reduction. That concludes my opening remarks, and I would like to request the moderator to please open the forum for the Q&A session. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask questions. The first question is from the line of Pratik Tolia from Systematics. Please go ahead.
Yeah, hi. Thanks for the opportunity and congratulations on a decent set of numbers. Sir, just a couple of questions. Firstly, in the chemicals, so you said almost 1,200 TPD of additional capacity is coming, which I think 850 belongs to you itself. And in the presentation also you mentioned there is a good demand from end user industry. So if you could just, talk a little about which end user industry is really seeing this kind of demand, and by, in how many quarters can we expect the entire additional capacity to get fully absorbed?
Yeah. Yes. So in chemicals, actually for caustic soda, as you may know, it is used across a wide variety of industries, including textiles, paper and pulp, alumina, other organic, inorganic chemicals. So it's sort of linked with GDP demand. If GDP is growing well, then the caustic demand also is expected to grow. So we are very optimistic that while there is some overcapacity in the short term, in the medium term, this capacity will all be absorbed comfortably.
Okay. And sir, with this whole logistic issue, I think the cost also would have gone up for import, anyone who's importing caustic. So what would be the imported caustic price? And does that mean that Indian industry would slightly be better off? So our prices should also, the domestic price should also catch up with the imported price?
So
Pratik, the imported prices are around $450, and frankly, the imports are not very significant. If you see in the Q1, only about 40,000 tons of caustic got imported. So there is no significant advantage coming as of now from exports, because see, the point is it's the freight. Freight is not being used either by the importer or the exporter.
Sure. Okay. And so secondly, I see that in the sugar business, we've kind of seen a sharp decline in the profitability, while sugar prices have also moved up. And so just trying to understand whether it is the sugar business which has seen lower profitability, or there is something in ethanol, because C-heavy, I think, would have done large part of it, you would have done C-heavy ethanol. So because of that, there is this hit. If you could just explain within the sugar division, whether it is the sugar segment or the ethanol which has got hit.
So as mentioned in the opening remarks as well, it is primarily in the sugar business, not ethanol. So sugar got impacted, one, because there were no exports. Last year, same quarter, we had exported about 2 lakh tons. And the cost of production went up, and the selling price increase was not commensurate. So that is the key reason. And the increase in SAP was about 20 rupees. So it's primarily, to answer your question, it's primarily in the sugar division, sugar business.
Sugar, right. Okay, got it. So, but I'm not sure, because some of the other competitors have not been, experiencing a similar sort of hit. So I was just curious to understand. Any specific cost other than the MSP and the AS has also gone, maybe the recovery rates are lower for us, something like that?
I didn't get your question.
No, I was just, some of the other competitors of your, in the same businesses in UP have not really highlighted a similar sort of cost pressure which you have experienced in this quarter. So other than the 20 rupees MSP and zero sugar exports, are there any other reasons which has led to a significant drop in the sugar profitability?
No. See, one is this, the other is the recoveries have been lower, and that has been across UP. Most of the mills, and especially in our region, the recoveries also have been lower, so that also led to a little higher cost.
That's right, sir. And then lastly, Fenesta also again over here, I'm seeing margin compression of almost 400 basis points YOY. Can you just explain what has really happened over here?
So, see, one, if you look at contribution margins, they have been largely intact. Now, as again mentioned in the opening remarks, the revenue growth has been lower than what we would have expected because of elections. And therefore, what we witnessed was that although our retail business grew even quarter on quarter, however, the B2B business, which is largely to builders, the institutional segment, that I would say that had degrowth. Although sequentially it is, year on year it has grown, but sequentially there has been a degrowth. So that is the reason, I think, which is temporary. It should get corrected. Maybe we are still seeing some impact, but it should get corrected over the next 1-2 months. And the other thing is on the fixed cost, which, as we mentioned, it's like investment, where we are investing for future growth. So we had 2 new factories which came up in last year, and we also have facade business which was set up. So all these add to the fixed cost along with the sales and business development cost. So I think once the revenue catches up, then it should be fine.
Understood. And so, did you say that project business was down? So, does it mean the project vertical has a higher margin versus retail?
No, the retail business has a higher margin, but then ultimately it is a mix. So if the volumes don't catch up, then obviously it will have an impact on the amount that is available to cover the fixed costs.
Okay. Understood. That's it from my side, sir. Thank you and wish you all the very, very best for the future.
Thank you.
Thank you.
A request to all the participants in the conference to use their handsets so that we can have optimum audio quality in the conference. A reminder to all the participants that you may please press star and 1 to ask questions. The next question is from the line of Ahmed Madhav from Unifi Capital. Please go ahead.
Yeah, thanks for the opportunity. My question was on the caustic volume growth. Can you give some sense where we have grown our volumes? Is it on domestic part or export side this quarter for the new capacity?
Yeah. Yes. So it is largely on the domestic front that we have grown, and exports as well, we have grown. So it's been on both, in fact. Exports for us, including lye and flakes, last year in the same quarter was 0.092 million metric tons. This time it is 0.12 million metric tons in this Q1 FY25. So we have grown on both domestically and exports.
Okay. And can you mention the key countries where you are exporting as of now?
So it's largely going to the Middle East, Africa, and the Southeast Asian countries.
Okay. Got it. And is there a sense on how much time it will take to ramp up the new capacity to optimum utilization? It will take more than a year, or by the end of this year we should be able to do?
So I think our entire team is focused on these efforts only to ramp up the capacity. I think we are seeing a steady growth in demand as well. So we do expect that towards the end of the year, towards the end of the financial year, we will reach significant capacity utilization, and by next year we will be able to reach optimal capacity utilization.
Okay, sir. And on the cost side, it is very clear that energy cost has come down. Is there any decline in the salt prices for us?
Salt is only about 15% of the cost. So yes, there has been a decline, but the major impact comes from the energy cost only.
Okay. Fair. On the ethanol side, how are you managing the feedstock availability for non-sugar, whatever we need? Are we able to get the raw materials at a price where we can generate decent margins? So how are we managing it?
So we are running on maize, and we have a team which is procuring, and we are procuring at a reasonable price, and which is giving us a reasonable margin.
Okay, got it. And on the epoxy, you mentioned that we'll plan it now. So are we at the stage where we can give some guidance? How are we thinking about the business, or is it too early?
So I think it is something which is being actively considered by the board. And once the board takes a final decision on it, we'll be able to share that publicly.
Okay, sure. Thank you so much. That's first.
Thank you.
Thank you. Participants, you may press star and 1 to ask questions. The next question is from the line of Jignesh Kamani from Nippon Mutual Fund. Please go ahead.
Yeah. Hi, sir. Just on the issue realization, you mentioned that it increased around 8% QOQ.
We can't hear you. Can you kindly be a little louder, please?
Yeah. You can hear me now?
Yeah.
Yeah. Just on the issue realization, you mentioned it increased around 8% QOQ because of the stabilization in the prices and lower, you can say, the power cost. Now, with capacity coming up for you and you can say industry around close to around 1250 electricity, do you think there will be pressure on the issue, or current level is sustainable, and you can say as the volume growth in the industry is also happening demand-wise, we can gradually improve from current issue?
Will there be pressure on ECU going forward?
So it's of course difficult to predict prices going forward. As we've shared, there has been significant capacity addition in the industry in the last 2 years. The capacity of the industry is now more than 6 million tons per annum. So we do expect that in the short term, it will be range bound. The prices are, on the lower side compared to earlier. But again, in the medium term, we expect with the robust demand growth that prices will move up.
Understood. And second thing on the in-house chlorine consumption, which you can see additional capacity coming up, what is our plan to increase the in-house chlorine consumption, and what is currently our percentage of the in-house chlorine consumption?
So along with our caustic soda expansion, we are expanding epichlorohydrin, so that will consume a healthy amount of chlorine as well. We have expanded aluminum chloride also at our Bharuch site. That again, is the capacity ramp up is going on, and we are consuming chlorine over there. So along with captive consumption, for us, a very important part is our pipeline customers. And their growth journey and our growth journeys have been in parallel over the last 20 years. So they are valued customers of ours, and in a way are the backbone, for us as well. So we look at it as captive consumption along with pipeline consumption. So the two put together, we'll be close to 55% chlorine consumption, and the remaining will be sold in the market.
So just purely our captive, excluding pipeline, what is currently, and say once all the capacity of the derivative will be up in place 2 or 3 years down the line, what will be the captive consumption can go to?
Could you kindly repeat the question, please?
So right now, what is our pure captive consumption?
There is an airy disturbance from your line. Could you please use your handset?
Sure. So what is the pure captive consumption excluding pipeline? Because pipeline will still carry the negative realization depending on the chlorine price movement. And once our epichlorohydrin and other derivative products will also commence in next 2 years and ramp up, what will be our in-house chlorine consumption share?
So so we have in Kota, we have PVC and stable bleaching powder as well. So in Kota, our captive chlorine consumption is close to 30%. And in Bharuch, our captive chlorine consumption will be close to 20%.
And what it will increase once all the derivative capacity of epichlorohydrin and other will be utilized?
So this is including those capacity additions. But in parallel, we are also evaluating other chlorine downstream opportunities, as was mentioned in the opening remarks. And once the board approves those will also be commissioned in due course.
Understood. Thanks a lot.
Thank you.
Thank you. Participants, you may press star and 1 to ask questions. The next question is from the line of Parth Kosani, an individual investor. Please go ahead.
Yeah, thank you for the opportunity. My first question is regarding the ECH. When are we expecting it to get commissioned? Any tentative date?
ECH. So towards the end of this quarter, we will be ready with the trials for the plant, and early next quarter, the plant will be commissioned.
Okay. And by when do we expect it to reach optimum?
So typically the process is for ECH, we have to get approvals from the customers. So after the plant is commissioned, that process of approvals from the customers will begin. So we expect that towards Q3 and into Q4 of this financial year, the plant will be running steadily. But the ramp up will still take some time. So a lot of the material benefit we expect will come in the next financial year.
Okay. And one bookkeeping question that I have is that we consume coal in our power plant. So that comes under the power and fuel cost, or it goes into the raw material cost in the P&L?
Power and fuel cost.
Power and fuel cost consumes the coal that we purchase for running our power plant, right?
Yes.
Okay. Thank you. Thank you. All the best.
Thank you.
Thank you, sir. The next question is from the line of Rohan Gupta from Nuvama. Please go ahead.
Hi, sir. Good evening, and thanks for the opportunity. Sir, first question is further in chlorine downstream. So even the current plan which you have, you mentioned 55% max including the pipeline. We will go in a captive consumption, 45% kind of number still have to be sold outside, which still remains a larger number given that in chlorine, many more capacities are also coming. So over next 3 to 4 years, if we do we have plans and internal strategy to go to 100% kind of chlorine internal consumption? And if so, then what kind of investment you think that will be required? Apart from epoxy, which other product line you will be evaluating?
So, to answer your question, yes, we are evaluating other chlorine downstream opportunities of various sizes and scales. So it would not be appropriate to comment on it until we have the approval from the board. But definitely we are evaluating those actively, and directionally we will look to increase our captive chlorine consumption. It might not reach 100% because we do want to remain in the market as well, but it will be, we will be increasing it continuously.
Okay. Sir, last year, many of the industrial chemicals plant were facing disruption and under pressure because of China. So your chlorine consumption would have also been impacted. How is the scenario now? Have the chlorine demand picked up? And in the current ECH realization improvement, I think it is primarily driven by caustic soda only. So chlorine prices still remains negative or lower, and when you expect them to improve?
Yeah, so the chlorine prices, Rohan, continue to be negative. And in terms of, what we are seeing is that chlorine demand in the country over the next 2 to 3 years, we see it improving. Right, with a lot of chemical facilities coming in downstream. We ourselves are going to do a lot of downstream, and we are seeing a lot of chemical capacities coming in, which should be consuming more and more chlorine. So I feel this scenario should improve over the period. It will take time.
So you think that chlorine still will remain negative, and ECH may remain under pressure unless we see chlorine going into positive or a sharp improvement in caustic prices?
I'm not too sure why should ECH get impacted.
ECU, I think.
You're talking about ECU.
ECU. Yeah. Sorry.
Yeah. So yes, to that extent, ECU may have an impact, definitely. And that is the reason we've been saying that for next few quarters, we do see the ECUs to be suboptimal. But what is important is that on cost side, we have taken steps ourselves in terms of investing on improving cost and efficiency, and the energy costs are lower, which we expect to remain sustainable, and therefore we should see reasonable margins.
Okay. Sir, next question is on our seed business. So this year we have heard that there has been a shortage of seed availability, especially in cotton, with the lower growing by the farmers. So, but we have seen growth and even further margin expansion in our business. So, do we also face any challenges in terms of the lower availability of seed and some outlook on that business for the current year?
Cotton. Not availability. Cotton demand.
Yeah. So see, the cotton seed, even on the demand side, there have been issues because the acreage of cotton planting has been lower this year. Significant fall in the acreage of the cotton seeds. So
we understand that from some of the competitors, they have mentioned that there's non-availability of cotton seed in the market, though demand is strong. So that's what I just wanted to clarify from you, that because you have shown growth as well in seed business.
So we have not, at least I can talk about our company, we have not encountered that, and what we understand from the industry is that the planting has been lower. So there has been no shortage. So that is one, and our performance has been good primarily because of the product mix, and we are seeing good realizations for the seeds.
Okay. Sir, last bit from my side. On ethanol business, you mentioned that it's because of your capability to procure the raw material grain base at a competitive pricing that is giving you still positive margin or profitability in ethanol. Otherwise, ethanol would have been under pressure. So just wanted to know that, I mean, it's a basically procurement area-wise benefit you have within your nearby 30 to 40, 50 kilometer, whatever area is there, or any other benefit, or there is surplus availability of raw material in your area that is driving the profitability in ethanol, because otherwise we are hearing that at the current grain prices and all, ethanol is under pressure and not making money?
See, Rohan, I'm not too sure about the competition, but as far as we are concerned, one, because maize-based ethanol prices also had gone up, and we are procuring from, in the most competitive or most efficient way, I would say. It's not competitive, it's more about procuring efficiently at the right time, and which is helping us with reasonable margins. It can be better, but they are reasonable.
So can you give us a catchment area for maize or the procurement of grain for our refinery?
So it will come from, let's say, MP, Bihar, partly UP.
Oh, so all across. I mean, nothing like that within, or maybe 30 kilometer, 40, 50 kilometer catchment area, nothing like that. Okay. Thank you, sir. That's it from my side.
Thank you.
Thank you. We'll take the next question from the line of Vignesh Iyer from Sequent Investments. Please go ahead.
Thank you for the opportunity, sir, and congratulations on great set of numbers. My first question would be, sir, I wanted to know what is our total, electricity that is power and fuel that is consumed for the quarter coming from captive consumption. I mean, coming from captive power, sorry.
So majority of our power is captive.
Okay, I mean, sorry, go ahead, please.
Yeah, please carry on.
Yeah, so that includes the 120 megawatt that has been commissioned in June. I mean, would that 120 megawatt create a surplus type situation in quarter two?
No, it doesn't create a surplus. It's about balancing the various power sets we have. So the 120 megawatt has been put up once all the capacities that we are bringing in, once all of them are fully operational at 90% capacity utilization. So we will be fully integrated on power, right? But as of now, yes, we will see which set is more efficient and run the sets accordingly. So 120 being the most efficient set will have the maximum utilization. And maybe another set, we have that capability because, we have sets of 50 megawatts, 60 megawatts. We'll see whichever is less efficient, we will reduce the load on that set.
Okay. I mean, okay. So this 120 megawatt, what is the nature of the power? I mean, the plant that is commissioned?
So it is a thermal power plant. The raw material is fossil based, so that is coal and lignite, and also biomass based. So it's a combination of these fuels.
Right. So if I get it right, I mean, say in a non-rainy time, you'll probably prefer for a renewable power since it is, more efficient and less cost compared to having to use coal, right? If I get it right, the idea is that.
No, I'll just put it this way that we already have a contract to get 44 megawatts of renewable power. But when you look at it on a 24-hour basis, because you can't get renewable power 24 hours. So on an average, we get about 24, 25 megawatts of renewable power based on banking and getting it back. So we are already using renewable power. We are exploring can we get more renewable power also. But this coal-based power plant also, especially 120, the new one, that price is also very competitive in terms of cost of production of power.
Okay. Got it. Right. Also, sir, coming on the PVC side of it, how has the price panned out in July as compared to June?
Well, actually, okay, go ahead.
Yeah, so the current prices are around 84,000-85,000. So the international prices also have come off. So let's say in June they were around $980. Currently they are about $910 per metric ton. And domestic prices are around 84,000-85,000.
Okay, and all this movement from May to June and June to July has been primarily because of freight only, right?
Yes.
Okay. Right, sir. That's all from my side, and all the best.
Thank you.
Thank you. You may press star and one to ask questions. The next question is from the line of Deepika, an individual investor. Please go ahead.
Hello.
Yes, ma'am.
Hi.
Please proceed.
Hi. Good afternoon, sir. So my question is relating to the power cost. Would you be able to quantify what are the cost savings due to power in the chemicals business this quarter?
So it's difficult to give you that number right away. Maybe you can contact us separately to Investor Relations cell, and we'll give you the details.
Okay. And what would be the outlook for the chemicals business for the remaining part of the year?
So like we've shared earlier as well, in the last year or so, the chemicals industry at an overall level has been under pressure.
Yes.
But now we are seeing that there should be a bottoming out. So we expect it to be, steady or gradually improve in the coming quarters.
Okay. And do we expect exports to open, or we have no comments on that for sugar?
For sugar right now, there are extensive talks taking place with the government for allowing exports because, as said in the opening remarks, last year our sugar stock on 30th of September was 5 million tons, and this year is going to be between 8 and 9 million tons. So we are trying to push for exports, and our constant dialogue is on with the government, the old government and the new government.
Okay. Thank you.
Thank you.
Thank you, sir. Participants who wishes to ask questions may press star and one now. The next question is from the line of Aditya Singh from Robo Capital. Please go ahead.
Hi, thank you for the opportunity. So until when do we expect to commercially commence the hydrogen peroxide and the ECH plant? And what would be the optimum revenue potential from both the plants?
Yeah. So, as we mentioned that the trials for hydrogen peroxide plant have begun, and we expect the hydrogen peroxide plant to commission in this quarter itself, which is Q2. And for epichlorohydrin, we should commission the trials in this quarter, which is Q2, and commercial production should start in the Q3. Maybe early Q3, we should start commercial production.
Okay. And what would be the revenue potential for both the plants?
See, for epichlorohydrin, as I mentioned earlier, epichlorohydrin, since it takes time to stabilize and to get the confirmations from the customers, we may not see a very significant revenue coming or significant contribution to bottom line coming in this financial year, and most of it will happen in the next financial year. Hydrogen peroxide, my sense is, if we look at second half of the year, we should have close to about 40-50% capacity utilization.
Okay. Okay, thank you for that. And regarding that 850 TPD caustic capacity that we commissioned in May 24, so that led to a dip in the overall capacity utilization. So for the entire year FY25, what capacity utilization do we see in this segment?
So, see, the point is, as you've seen, the overall production has gone up, given the additional, it will all depend how much capacity we utilize depending on market conditions and the new capacity is coming in. So we do expect that the additional capacity that has come, that is about 850 TPD, for, let's say, second half of the year, we should reach close to about 50% or 40-50% there as well.
Thank you, sir. So the participant has left the queue. Anyone who wishes to ask questions may press star and one on their touchtone phone. The next question is from the line of Shantanu Naik from HCMR. Please go ahead.
Hi, sir. Congrats on good numbers. So I wanted to ask, what would be the ECU pricing for this quarter?
ECU. So it's always hard to predict the pricing going forward. Current ECUs are in the 27 to 28,000 rupee range, and we expect it to be range bound or improve gradually.
Okay. And second question is, what would be the current contribution of chlorine derivatives in our revenue?
So if there would not be any general number which applies to all. It is a case-to-case basis. So anytime we evaluate any product, we look at it giving a healthy return, and then we move forward with those decisions.
Okay, but still any ballpark figure in your mind?
So as I said, it will depend product to product. So it's hard to give a number like that in general for chlorine downstream.
Okay. And I just wanted to ask, I have been looking at the margins for SFS verticals. So why they are on decline in sequentially? Any specific reasons for them?
That is because of seasonality. This is the, and I don't think there is a decline, frankly. Sequentially, if you see, March is not the season, or the March quarter is not the season for that business. So that's not the representative either. And actually, the margins have not declined for that business sequentially.
Okay. But if we see previous year were 11, previous quarter were 11, before that it was 14. So, I mean, I was just confused on that. So, I asked.
No worries. I think this is a more specific question. So maybe we have to go vertical by vertical. You can connect with our investigation department, and they will give you the details.
Sure. Thank you. That's on my side. Thank you.
Thank you.
Thank you. You may press star and one to ask questions. Participants who wishes to ask questions may press star and one now. The next question is from the line of Aditya Singh from Robo Capital. Please go ahead.
Hi, thanks again. I got dropped accidentally. So I was asking that because of the addition of 850 TPD caustic capacity, the total capacity utilization got down. So for the full year FY25, where do we see the capacity utilization for this segment, caustic soda?
So as I mentioned that in the second half of the year, the expanded capacity, we should see a 40 to 50% capacity utilization. And the existing capacity, which is close to about 1,800 tons per day, we should be utilizing about 80-85%.
That's all right. Thank you. That helps.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Thank you. Ladies and gentlemen, thank you very much for your participation in our earnings conference call. We continue to be guided by our philosophy of growing through capacity, capability, technology, new products, and value addition. Further, with our commitment towards the environment and society, we keep sustainability integrated into our business practices. We strive to create long-lasting value for our stakeholders, along with delivering better earnings and growth. Thank you very much once again for participating in our conference call today. Thank you.
Thank you, members of the management. Ladies and gentlemen, on behalf of DCM Shriram Limited, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.